the longest running real estate talk show in the North Bay, The Real Estate Hour, with Allison Norman and her business partner, Stephanie Norman. Now, here are Allison and Stephanie.
Good morning. Happy Sunday.
Good morning.
November 16th.
Good grief.
Good grief.
It's almost
Charlie
Thanksgiving.
Brown.
It always sneaks up. Even though you know it's coming, it always sneaks up.
I
on
know,
you.
yeah, it just flies by.
How is it already?
And then-
What is it, next?
Is it
Next week? No, it's
No, 2 weeks?
not this week, but the week after.
Yeah.
Right? I think so. It's like the 20-something. 20-something. It's the third Thursday of the month. Anyway, welcome to the Real Estate Hour.
Yes.
We are, we're gonna take a look at the numbers as we usually do today. Also a couple of things we've been meaning to talk about is the, and then just had other stuff going on, but there was an announcement about credit scores in lending, and they're kind of, they are reconfiguring for conventional financing the way they look at your credit worthiness, and have removed the minimum requirement credit for the direct underwriter, which is the kind of streamlined initial not pre-qualification but pre-approval. So they put everything into a system called the direct underwriter, and if you didn't previously have a credit score of 620 or higher, that would automatically kick you out. Well, now they've removed that, and they are looking more at just your credit worthiness, things that play into that. So that's good news. And so in that we have, I had put together kind of a list of all of the types of loans. So there's conventional financing, there's the FHA, there's Fannie Mae and Freddie Mac, which are your conventional, and then there's FHA, and there's USDA, VA, there's also then a lot of portfolio loans and all that. And it's important to remember that every mortgage company, every direct lender, they all have their own set of criteria, but they have to stay within the minimum of what the entity that's loaning the money requires. So there's been some changes there. We are going to have Amanda Hagar, a great lender that we work with and recommend often to our clients, and she's going to be on I believe December 7th. But anyway, she is coming on to really kind of do a really kind of a good look at what's happening with mortgages and all that.
And we actually, we know a lot of good lenders, but with Amanda, I love recommending her to first-time home buyers. She's very helpful with that.
Yeah, and we have a few that are as well. But I agree with you. Amanda has been really good at really explaining and with a calm and gentle demeanor, although she can take care of things when they need to get done. That's what that kind of falls on. I think both of us kind of calm and gentle demeanor, and then people go, oh, you can't be strong when I need a strong negotiator. That's not the case. So there's people can be calm in the storm that you need them to be calm, but can also be can fight for you when they need to. And I think I always, when I say that, I have to kind of preface it, but they're not a pushover. Neither are we. But anyways, no, I think you're right. And somebody that's confused, scared, of the whole process, to be able to Joe, what do you got going on over there?
I don't know.
Just playing music in the background. Anyway, I think having somebody that really isn't going to be pushy, and people are, especially I think in your generation, first-time buyers, the young millennials, and what's the one below, the Gen Z, I guess, is below, I don't know.
Very iffy
Alpha,
about talking
Alpha,
to lenders because they're not ready to buy a house yet.
Yeah. They don't or they don't think they are. They don't know. They want to wait till they're completely ready, and then they'll go talk to a lender. But
talk to someone so that you know what you need to do to be prepared to be ready.
Right. Exactly.
The lenders are great. They give you a whole list. And they won't bug you like, hey, you ready yet? Let's go get a house.
And they do, sometimes they'll reach out, but they're not reaching out in a pushy way, or at least the ones that we recommend to you are that way, and that's why we like to recommend you, because I don't like a pushy salesman, a salesperson. like to be a pushy salesperson, and we don't like to recommend somebody that's going to just hound you. At the same time, it's also not, I appreciate when somebody follows up with me.
Definitely,
it's like, because I get busy, and I'm like, I really honestly want to do this, but I need someone to kind of remind me that I wanted to do it, you know. And so there's kind of a fine line, I think, between you know, being too pushy and being there to just say, hey, you know, just checking in with you, can I help you with anything, did you still want to do that thing, and can I give you an update on what's happening and all of that. And I think it's a big difference. I have actually right now, there was something I was going to sign up for that I really wanted to do for business related, and I kept, you know, we were kind of playing phone tag and email tag and all of this, and then she stopped contacting me. And honestly, if she would contact me, I would probably sign up for the thing. And now I'm going, well, maybe I didn't need it, you know. So you know, there's something to be said for the salespeople out there.
Definitely.
Follow up, but don't follow up like a jerk. So
there was ways to do it correctly.
Yeah. Anyway, sorry, that was our, I don't know what that was, our little soapbox conversation. But also an interesting thing that came up, and really has come, we all know, and we talk about all the time about insurance. I had an agent call me and say, you know, my client is looking to see if they can get insurance on this property that we have listed, and he was told by several insurers that it's uninsurable. I'm
Nothing
like,
is uninsurable.
What?
Well,
did they tell him that, or did he understand it as that?
Yeah.
And so we actually had a long conversation. He said, oh no, I sent him a bunch of other lenders that I've used out of the river, out everywhere else, you know, and places that are hard to insure. There's always somebody that'll do the insurance, and you know, they may have said, oh, we're not doing insurance in that area, because it's a high fire or high or very high. It comes up on the map of that, which so much of Sonoma County is. But anyway, it's the FAIR plan. You need, I mean, that's the plan of last resort, is you need that FAIR plan. It's a California FAIR plan, and it is a little more expensive. But the thing is, you only need it for fire, and then you get a wraparound policy for everything else, all the liability, the you know, damage from a storm or from a leak, or you know, some you know, sudden thing that happened. You want to have that for your protection and to protect your home, but actually the lender only requires the fire, that fire portion. What we've advised, and please talk to your lender if this is a situation, but sometimes the high cost of an insurance policy with the fire and everything else will put you over that debt to income limit. What I've had a lender advise before is you only have to have that fire policy, and then so you qualify, you get the loan, and then you know, add it on, but you add on the rest after. You know, this isn't loan fraud. This is just, this also may not be you know, the smartest thing to do, but it may be the only way you can get a loan. I would advise that you make sure you can actually afford that additional policy.
And talk to your lender.
And talk to your lender. This is not me advising you. This is me telling you, this is what we've heard from lenders. This is what we've heard them advise their clients. And it is a solution in some cases, but be really careful, because getting into a house without insurance is not a good idea.
Definitely not.
But you absolutely have to have the fire part in order to get, if you're getting a loan. If you're not getting a loan, you don't have to have any of it, but that's also not very smart. We've actually heard stories of people that lost their homes in the recent fires we've had, that didn't have insurance, or their insurance had lapsed, or they were in the process of getting insurance on a house they just bought that they paid cash for, and they didn't, you know. Be careful, don't put yourself in that situation. Anyway, so we're going to talk about what actually makes a house uninsurable, because it virtually, well, not virtually, but almost nothing is uninsurable. There's always some way you can get insurance on a property. There are some things that'll stand out to an insurance company, where they're going to say, no, we're not going to do that. Then there's the environmental, the fire, high fire thing. So we're going to talk about what, because that, when I talked to this other agent, he said, I've been hearing that from quite a few of my buyers that are being told, and I don't know if it's just the language the insurer uses, but they're being told that it's uninsurable. And it's not uninsurable, they just aren't insuring it themselves. So be careful with that information. and really make sure you understand it. So that's what we're going to talk about, and then the numbers, yeah?
Yeah.
And I think we got to take a break though first,
I
right?
think that's a good idea.
let's take a quick break, come back, we'll dive into the what happened in the real estate market. There's some interesting change in the numbers that we'll tell you about when we come back. I'm Allison Norman.
I'm Stephanie Norman.
We're the Norman Home Team, and you're listening to the Real Estate Hour. We'll be right back. Good morning. We're having some sound challenges today. Darn it. Anyway.
Technical difficulties
in the studio. So what you didn't hear was I'll be home for Christmas.
Yep.
And we're playing that because
You don't want me to sing it.
None of us. I'll be home. No, so we like to play that when, and that's an old Mike Kelly tradition of really kind of starting in October usually is if you want to be in a home by Christmas, you really need to be right now looking. So typical escrow is what, it's like 30 days, 21 days some lenders can do. Some loans, they say, oh, we need 40 days. That typically, they don't really. They just like to give themselves extra time. Most, to be competitive, you want to write an offer no more than 30 days. 21 days is really nice. If you're getting a loan, if you're not getting a loan, 10 days, 7 days. If the seller is okay with being out that quick or closing and doing a rent back or whatever. But if you want to be in a home by Christmas, really by the 24th, 23rd of this month, you need to be in escrow, start that whole process, and then you can close by Christmas.
And if you need a realtor, we are your local realtors and can help you with that.
Absolutely. We'd love to get you into a home by Christmas.
And we cover 5 counties: Sonoma, Marin, Lake,
Mendocino,
Napa. Thank you. Is it more than 5?
Once in a while, we actually go up to Solano too, and we don't like to go in. And I don't like to say once in a while we go here and there, but we really do keep an eye on the market and understand the market, understand the pricing. No agents in those areas, so because I think it's important to have those relationships when you write an offer on a property that they're not, oh, who's this out of the area agent? It's not out of the area. We do work in that area. But yeah, we go to Fairfield, and a lot of times it's somebody that's looking in Napa and they're not finding what they want, so then they're all, well, how about if we look in Fairfield? Because the prices are really
and
good
if
in
it's
Fairfield.
Out of our range, we know lots of realtors we can connect you with that can help you.
Yeah, like Mendocino, we go up to Ukiah. Oh, we go up to Ukiah. We go up to Hopland, which is before Ukiah. If you get much further than that, neither of us are really familiar with that market, and the coastal Mendocino we're not really that familiar with. So we're going to recommend somebody.
Yeah, and we recommend that you work with someone that knows the area and knows that market.
Yeah, and knows the agents in that market too.
Yes, and knows the agents. It makes a difference.
It does make a difference if you have those relationships with other agents. If your agent has a relationship with other agents and they're not being considered as somebody coming from out of the area, not knowing what they're doing. And then also, if somebody's coming out of the area, from out of the area, they don't know that there's kind of customary things that are asked for in an offer in different locale. I mean, there's California is one set of rules for the entire state under Department of Real Estate. However, different locales have different kind of traditional, like who's paying for title and escrow, who's in Southern California, they used to actually require the seller to do a pest report, or there to be, they make it like part of, a lot of times they'd write it in the offer. They wanted it cleared because once you put it in the offer, then the lender sees it and they want it cleared. I think they've gotten away from that in Southern California now, but it was interesting that somewhere halfway up the state, it switched over to where, no, we don't ever write the pest report into the purchase contract. If you want the seller to do it, just know that the lender's going to see it because you're putting it in the offer, and now you have to fix every single thing. And so sellers would come up, people that sold in Southern California would come to buy a house in Northern California, and they want the seller to take care of all the pest report items. And we don't do that unless you're going to negotiate, and we don't ever write it in the contract. And they're all, well, I had to do it in Southern California. And it's like, well, I'm sorry, we don't do that here. So it's just, my point is that if an agent comes from out of the area, they don't understand those little intricacies that are customary in,
and it
also
helps to know who the lender is, if it's
Yeah.
someone that you recognize, and a name that you recognize.
Yeah, and using a local lender
yes,
is great.
It's all very important.
Yes, yes. So anyway,
And so, should probably move on to the market updates.
let's look at the numbers because we were just kind of getting off onto our little soapboxes
Yeah.
today. But okay,
Wow.
let's talk about. I know what else is new. Let's take a look at the market. What's currently active on the market? The numbers are actually down, and not have no fear. It's a normal part of coming into the holidays, the winter months, and a lot of people will actually take their house off the market, which I don't think is a wise thing to do, because even though there are less people selling, there's actually really the same number of buyers out there looking, and there's people that are trying to get into a home by the end of the year. There's
By Christmas.
By Christmas, yeah, by holiday.
Yeah.
By one of the other holidays, or really just for tax reasons. Sometimes you have to. Some people are doing a 1031 exchange and they have to buy a house. So it really it's less inventory now. So they're for buyers, for sellers actually that's good because there's still as many buyers out there. So 855 where we've been up over 1,000 as recently as a couple of weeks ago. Right before Halloween. Yeah, right before Halloween. Even we were 1,008, 1,026 a week before that, 946 on 2 weeks ago, and then we were at 912. So now we're at 855. So it's down a little. To be expected around the holidays, like I said. Median price for what's active on the market, single family homes, is $1,275,000. Here's the thing, we're down in inventory, but our in escrow is pretty similar to what it has been. It's at 302. It's been, it came down a little, like maybe 20, but actually it was 298. Yeah, so anyway, it's staying consistent is my point of the buyer side of what's going into escrow while the inventory is a little lower. Condos, we have 124 active condos with 42 in escrow. Mobile homes, we have 85 active mobile homes with 32 in escrow, and the multi-units, we have 113. That's 2 to 4 units. We have 113 active with just 29 in escrow. That number's actually up. Yeah, they're all down. That number's up a little bit. Same number of in escrow though. And then land, we're at 312, still sitting over 300, which we hadn't seen for quite a while until earlier this year when it bumped up over 300. So buildable residential land, 312 active listings with 27 in escrow. I forgot to mention single family homes in escrow, the 302, the median price for that is $875. So we're still seeing that middle of the market kind of being, in that 850, 870, we're at 875 today. That means we're kind of same number of homes in the lower price range you're selling versus the higher, there's more active in the higher price range. Okay, do we have time for the market snapshot from Stephanie? Perfect. I have plenty of time for once.
Alrighty, so for market snapshot from last Sunday to today. Sonoma County single family residential. So new listings, there's 59 with a median list price of $975,000. In escrow, 69. Pending, 59. Price reduction, 72. Closed, 74 with an average sold price, $795,000 and 69 average days on the market.
Is that a median sold price?
It is a median sold price, thank you.
Should we talk about the difference real quick? The difference
Yes.
between median and average. So if you remember basic math, how you find an average is you take the number, you take all the numbers, you add them together, and then you divide that sum of you divide that by the number of numbers that you added together. You get your average. Okay, median is like a needle that goes up and left and right, up and down. Based on where the price points are. So it's the middle of the market. So if we have more higher priced homes sitting on the market or coming onto the market, that needle moves to the left and goes up. So the median price goes up. If we have more lower priced homes, then the median goes down. It's kind of a combination of that, but then also home prices in general, if they go up or down. So it's really looking at two things. It's what most people look at as the median, not the average. And I think, I don't know why they do, but that's why most economists, most things you hear, it's the median price they're talking about. But it really is looking at a combination of what's on the market, what there are more of.
Yeah.
But also as the numbers go up or down, that median also goes up and down.
Yeah,
So.
I was just going to mention, a lot of times you'll hear on the news where the market's at, and they're talking national real estate. Here we're talking about Sonoma County, local.
Yeah.
And if you're wanting to know more specific area, your neighborhood, your house,
Right,
or
different county.
a different county, yes, we can help you with that. We're more than happy to. You can reach out to us.
Yeah, we can give you a really kind of a weekly look at what you're specifically interested in. And we like to look at the Sonoma County market as a whole because it's good to see the health of the market and what's happening. But really it depends on, and so many people say, how's the real estate market? And our canned answer is, and it's really the best answer is, it depends.
Yeah, or it's
Two things.
interesting.
It's interesting. Always, no matter the market, it's interesting. And it really honestly is, if you're interested in that. It's interesting. And then also, it depends. It depends on where you are, what type of house you're looking at, what's the condition of the property. It's all the different things. It depends.
Definitely, yeah.
But yeah, so don't listen so much to the news unless it helps you understand what's happening nationally or even statewide. But just remember, there's so many different markets, and there's some markets across the country that are really suffering right now, and their values are way down. Their foreclosures are up. There's other parts of the country where they're seeing still multiple offers and not enough inventory. So it's all over the place.
Yeah,
so don't just,
especially if you're looking at California.
Yeah.
You're gonna get some
very
crazy
different.
numbers. Yeah.
Very different. Yes, I know. But then there's the Inland Valley, California, that's very different as well. So anyway, it's time to take a break for the news. So we're gonna do that, and when we come back, we'll talk about insurance and what really does uninsurable mean, and is there really something that isn't insurable? I'm Allison Norman.
I'm Stephanie Norman.
We're the Norman Home Team, and you're listening to the Real Estate Hour. We'll be right back. Good morning. We're back.
Good morning.
We are back. So we've been struggling with technical issues, but that's okay. So apparently our podcasts, we're gonna have. So this is more important than ever that you, if you want to revisit the show, we're gonna be on. We'll have it up on YouTube because our recording isn't working for the podcast. And if you didn't know, Joe every week after the show is very good about putting the podcast and all the links and all the stuff together. Unfortunately, that's not working today. But that's at KSRO.com. If you go to shows, then Ask the Expert, you'll find the Real Estate Hour. And you can find our recorded
we
shows,
have.
past
You
shows.
might want
All
to
of us
mention
should.
last week's interview. That's there.
Good. That is there last week. Yeah, we have it
you.
actually both on YouTube and on KSRO.com. Is our really good interview we had with Russell Marsan with IPX 1031 talking about exchanges, which is the way to basically kick the can down the road in having to pay taxes on your capital gain on an investment property. It's a really, really good investment tool. Russell has a really good grasp on. I mean, he's been doing it for, I think he said like it was close to 30 years. I don't remember exactly. You have to listen to the recording and he'll tell you. He has a great website. If you go to ipx1031.com, I believe, and then /Marsan, M-A-R-S-A-N, he has tons of YouTube videos about exchange. If you have an investment property, you're tired of being a landlord, or you're just having an underproducing investment property, it's a really good idea to consider doing an exchange. Sometimes it doesn't make sense, but sometimes it does, So,
Yeah,
and
definitely.
as with everything, do some research and see if it makes sense for you. Okay, so that took me off track, but also, so if the podcast isn't working today for the recording, our YouTube will be up.
And what is our YouTube?
Our YouTube channel is Sonoma County Real Estate Hour on YouTube. So youtube.com, and I think you go / Sonoma County Real Estate Hour. Or just search Sonoma County Real Estate Hour on YouTube and you'll find it. We have a lot of our past shows. We started doing it. I think we have like maybe 15 or 20 up now. Every week we record. We're recording. We'll wave at you. Anyway, so there's different ways to look. So now, since the podcast on KSRO is not going to be up today, please go to Sonoma County Real Estate
And you
Hour.
can also find us on Facebook, The Real Estate Hour with Allison and Stephanie Norman. We post a lot of
Yeah. We'll put the
events.
link to
We
the YouTube
post
also.
we post the numbers.
Yeah, Stephanie's really good about putting it in a nice, easy to read and understand graphic, so you don't have to write it down while we're talking.
Yeah.
And all of that, but it's really interesting to me, at least. If you're interested in numbers and the economy at all of real estate, it's interesting to look at and go back and look at past numbers,
definitely.
and because so you can do that on Facebook. Just go look back at all the past numbers.
And then I just wanted to mention that normally we do events. And so if you're looking for something to do in Sonoma County this week or next weekend,
Yeah, coming up to the holidays.
you can always check out this. Happening Sonoma County is really good on Facebook. And then also, if you just Google what's happening, like
What
Sonoma
can I
County
do today?
events.
Yeah, I just kind of, my entire life, I feel like I've been behind in hearing about events after they happen.
Yeah.
So it's why we like to talk about the events, and
Mhm.
and thank goodness for Google that you can. I still feel like I miss things though. And
Yeah,
like the Press
yeah,
Democrat is famous
definitely.
for saying this happened yesterday. I'm like, well, darn it, why didn't you tell me the day before that it was going to happen?
Yeah, definitely.
They had the sofa, the winter blast down in the Arts District, South Bay Street. They call it the sofa. They actually have a thing where people decorate sofas and all that. That happened
Yeah.
last night, and I forgot about it and heard about it as I was driving home at like 5 o'clock. It was a little after 5 o'clock last night, and then the parade started. They had a parade at 5 and at 7, so I missed it. But I mean, I could have gone back, but it was anyway.
But yeah, so we post a lot of events on Facebook, the Real Estate Hour with Allison and Stephanie Norman. So if you're looking,
Yeah, happening Sonoma. Go local. And I think Go Local, just they usually share the happening Sonoma.
Yeah.
So happening Sonoma is is where it's at. I think you can actually contact them. We should have somebody we should contact them, have them come on and talk about it, because I think you can also then submit your events and stuff.
yeah,
And also, by the way, if you can reach out to us, text, email, nodumbquestion@gmail.com, text 707-799-3617. It's all on our Facebook page. Or go to our Facebook page and send us a message. But if you have an event or a specific thing happening, a community situation or something that's going on that you want people to know about, or an event you want people to know about, we're happy to chat about it on the radio. So
yes.
let us know, and we'll add that. We'll put it on our Facebook. We usually share stuff also on Sonoma County Cares, which is a Facebook page that we created, or a Facebook group that we created back during the COVID era, and it's become a pretty good channel for sharing information.
Yes.
We have a strict no solicitation policy, so I go through and I keep track of that, and I have to approve. If I don't approve it, it's because you're salesy, and we don't do that on that page.
Yeah.
We can do it somewhere else. If you want to let us know, we'll share it for you. But anyway, okay, we got way off track, but let's talk about insurance. So at the beginning of the show, I mentioned one of our listings, an agent called and said, hey, who is the person using for insurance? Because my potential buyers thinking about putting an offer in had heard from two different insurance company or insurance agents that the property is uninsurable. And I'm all, wait, did they actually say the property is uninsurable? And he's like, I've heard that from other buyers as well, potential buyers, or buyers that he's worked with. And we kind of hear it once in a while too, but where they say, and I don't know if it's the insurance agents that are saying it in a way, they're saying it's uninsurable, or if they're saying we don't insure that property, or we can't write a policy on that property, and the buyer's hearing it's uninsurable. Please don't assume something is uninsurable just because an insurance company says they can't insure it.
Yeah.
The biggest problem we're seeing right now across the board is some insurance companies have flat out left California, or they didn't necessarily leave, but they stopped issuing policy. They'll still do car insurance, they'll still do other insurance, but they aren't doing, and they'll actually do a wraparound policy for everything except fire. They just aren't doing fire. And then there's State Farm has been pretty good about insuring in high fire areas. It's my understanding, one of our clients sent me a video with all this information about kind of what's happening. Maybe I'll post that on the Facebook page. But there's like 5 companies that expressed interest in following some new rules that California has set for somebody to be able to, or I don't know, it's too hard to explain right now. But anyway, Mercury Insurance was one of them, but I don't know if they're officially writing in California again, but it was kind of a push to get some insurance companies to come back to California and do these fire insurance policies. But the point is, if you're in a high or very high fire area, and how you find out, really the best way to find out is the natural hazard disclosure report. That if you're selling, we always pull it before before we put it on the market, just so we know. And then there's specific forms that the seller has to fill out if they're in a very high fire area. If that's the case, in most cases, the insurance company will refer you to the FAIR plan, the California FAIR plan. FAIR, it's not fair, but it is. It's fair because they said, look, we have to at least offer, and it's an acronym for something, and I can never remember what it is, and I'm sorry about that. It's fair. It's California FAIR Plan, but and it's actually been around since like the 60s, but really we only started having to use it after the recent fires, and I think even before the Tubbs fire in 2017, where there were the Lake County fires. So, and then a lot of insurance companies said, okay, we're not going to do this. So the FAIR plan has really come to the surface as something that a lot of people are using. Now they're talking about, well, maybe the FAIR plan's going to run out of money. Now what do we do? So there's a lot of talk behind the scenes going on about making insurance work for us. Anyway, so if somebody says to you, this property is uninsurable, and it's because of the fire element, the area that it is, it's not uninsurable, they just aren't offering the insurance.
Exactly,
But there really are some situations, and it's not very often that we see it, but there are some times when a property truly is uninsurable, and it means that they've put a condition on it saying they're not going to insure it until you do this, or until you fix this.
When the risk of loss is deemed too high, or the condition of the home falls outside of the underwriting guidelines.
So
severe property damage or deferred maintenance, high fire risk due to wildfire exposure, and unpermitted or hazardous additions. And
so
there's we have a list that I'm reading off of. Sorry.
No, that was good, and you touched on a lot of them. So the we talked about high fire risk, and then but the other thing is, sometimes it's condition of the property, and what I've seen personally is electrical panel. If it's an old electrical panel,
that's a big one.
The insurance might, and what they're doing now is they're asking, it's like, well, what did it say on the home inspection? And we go, oh my gosh, so they don't always, but just know that they might have an issue with that. And if you say, oh, it's an old, the Zinsco panel, some insurance companies are saying that has to be updated, or we're not going to insure the property. The scary thing is that they have a certain amount of time to come out and do an inspection after you close escrow. And they might say, oh, we didn't know about this, and then you're having to fix it. So just be aware of that, and really, it's kind of that, gosh, do we tell them or do we not tell them? You don't lie to your insurance company. I'm not advising that, but we're crossing our fingers and hope they don't find something that they say, oh, we're not going to insure this. But a roof, I've had them before where they actually required a roof be put on. It wasn't the lender, it was the insurance company that said, we're not going to insure this property unless it has a new roof. And in that case, it was a really bad condition roof. A lender can do that too, but in this case, it was the insurance company. Those old shake roofs, especially, they won't insure those. So, anything, if it's the house is falling down,
exposed wiring, unsafe electrical panels, like you said, outdated. Knob and tube systems, major plumbing issues or ongoing leaks, structural problems, foundation damage or sagging floors, broken windows, missing handrails, or other safety hazards.
Missing handrails is a good point, because they will, if it's over, I think 18 inches, a raised deck or a stairwell, they want handrails, but they will require that, and they'll say.
And we've had properties that we've listed that had to have those handrails put in.
And it's sometimes it's FHA will come and do health and safety in their appraisal. They're checking that. It might be FHA that says you need to have a handrail, but it also might be the insurance. And that also might be something that happens after closes escrow, because of usually they're just looking, sometimes they'll do an overhead, Google Earth or whatever, they'll look at that, they'll look at where it is, they'll look at what zoning it falls into, if it's in a high fire area, if it's in a flood area. We didn't even talk about flood insurance, so that's a whole other thing. If you're in a flood zone, then you're required to have flood insurance. A lot of properties, especially out at the river, that fall into both categories. They are in a high fire area, they need the FAIR plan. They also are in a flood zone. So now you're looking that you're having to get flood insurance, you're having to get fire insurance, and then you have to get that wraparound everything else insurance. It's really, really, really important that you check right away, even sometimes before you write an offer. It would be nice, because then can I get insurance on this property?
And I think of it as, if you're buying a car, you want to know what your insurance is going to cost before you buy the car.
Yeah.
So it kind of goes with that.
That can be a big shock to somebody that doesn't realize that when you're financing a car. It's like, oh shoot, I have to have full coverage insurance. Where you had just liability for all this time that was the bare minimum required. So that's a really good point, and that's good for your age group. I think,
that's what I compare it to that a lot, because most millennials have bought in a car. Yeah. And so
they understand. Anyway, bottom line, and before we take a break, and we'll wrap that up, and then we're going to come back and talk about the credit score and the change in financing, bare minimum requirements. And but for insurance, so if you're looking at a property and they're saying, and you're looking around for insurance, as you should do before you put an offer in or right after. And don't wait till the very end. We used to wait till the end and go, oh, by the way, did you have insurance? It's actually a contingency that you can remove separately. But it doesn't take them a couple of days. It takes them sometimes a good couple of weeks to get everything in place for you. So make sure you do that ahead of time. But if somebody says it's not insurable, if it's because it's fire, if it's anything, find out what do they mean by that. And then you start making calls, asking around, talk to your realtor or the agent that's listing the property, because they know either who the current person has. In this situation, she's grandfathered in with the insurance company she has, but anybody new that buys the property is going to have to get a FAIR plan policy. That's important to know as well. So have those conversations and start early to find out, but nothing's uninsurable. It's just, what do I have to do to make it insurable, and who can I find that will insure if this person won't? So really good information. Make sure you ask questions. There's no dumb question. Send us an email, nodumbquestion@gmail.com. We're happy to send you in the right direction to get the answers, or we'll give you the answer ourselves.
Exactly.
Right? Exactly. Okay, let's take a quick break. When we come back, we're going to talk about changes to the conventional financing and your minimum credit score and what all that means to everybody. Okay, I'm Allison Norman.
I'm Stephanie Norman.
The Norman Home Team, and you're listening to the Real Estate Hour. We'll be right back. Good morning.
We're back.
Alrighty, welcome back. It's the last little segment, last 10 minutes of. And we wanted to make sure that we fit in this information. And we're going to talk more about really the whole qualifying process when we talk to Amanda Hagar, who's calling in on December 7th, I believe. But in the meantime, we really wanted to get this information out, that there's been a big change, and it starts beginning November. That's today, right? November 16th.
Yeah, today.
Beginning November 16, 2025, borrowers may qualify even with a score below 620. This is Fannie Mae. It's one of the two big entities that lend that we call conventional financing. And then there's FHA, there's VA, there's USDA, there's all kinds of portfolio loans, there's all the other things, but Fannie Mae and Freddie Mac are the conventional. When you hear conventional financing, that's who it is. So Fannie Mae has removed the long-standing requirement for a minimum 620 credit score for many conventional loans, and that begins today. So borrowers may qualify even with a score below 620 as desktop underwriter. Can't say that apparently. The DU desktop underwriter. There's another one that they use too, and I forget what that one's called, but it's a direct underwriter. Basically, they put all of the information into a computer, and it spits out a approve or not approve for the loan. If it spits it out as a no, that just means they need to do some further, maybe they need to find out why it's not approving. But to get the quickest pre-approval, not a pre-qual, that's when you just put numbers in on somebody's website. It says, congratulations, based on the information you gave, you should be able to qualify for this type of loan, and this dollar amount and all that. We don't like to see that when we get an offer. We want to see at least a pre-approval, and then there's an actual hard
also
approval.
showing houses. It's good if you have that pre-approval letter.
For sure, because they've put it through the direct underwriter. So previously you'd put it in the direct underwriter, an automatic hard no, and I'm not a lender, so I maybe some lenders didn't have an automatic hard no, but the 620 credit score. So if it was below that, they'd say, nope, can't do conventional, let's try FHA, or let's do something else. Now they're saying they're basically going to be looking more at a holistic risk assessment, which includes income stability, your debt to income ratio, your assets, your credit history patterns. So they're looking at your credit report, but not your scores so much, or at all, apparently. If I'm understanding it correctly. Talk to your lender. So also individual lenders, mortgagers, mortgage direct lenders and brokers, they have kind of overlays, and so they may not accept it. They may not want to do a loan if it's under 620. Or they may require you to have a higher debt to income, or they may, they have their own overlays. So talk to your lender and ask them if this is the case for them. But this is in the news, and this is what they're saying. That no more 620 minimum credit score for Fannie Mae eligible conventional loans. Freddie Mac, which is the other one, has really, for the last few years at least, they haven't really had a hard, no strictly published minimum score, and they've looked more at your credit worthiness as well. And then anyway, so they're looking more at a holistic assessment, which is nice. They can look at, and then maybe they can say, well, why did you miss these payments? Maybe there was something in your life happening, and all that. So removing that number, you're no longer just a number. At least when it comes to your credit score with Fannie Mae. Again, lenders may impose their own overlay or minimum score requirements. What does this not mean? It doesn't mean that not everyone under 620 automatically qualifies. Again, they're looking at the whole picture. Excuse me, and full underwriting still applies. Does not mean that mortgage insurance companies or specific lenders may still require certain score thresholds, and it does not mean that borrowers must still demonstrate, it does mean borrowers must still demonstrate overall credit worthiness and financial stability. So they're just removing that number part of it and looking at the whole picture, which is nice. And why this matters for buyers: more flexible access to conventional loans, even with those that are working on rebuilding their credit. Better options for first-time buyers or those with strong income but imperfect credit. Sometimes it's not enough credit. I don't know how that'll fit into it. Allow more buyers to enter competitive markets like Sonoma County here in the North Bay. Anyway, so it's important again to talk to the lender, but just know that is a thing. And just to kind of put it in comparison with other types of loans. Like I said, Freddie Mac has no strictly published minimum score for some programs when they run it through that loan product advisor, which is similar to the direct underwriter. Historically 620, it's historically been 620, but many lenders still use that 620 to 640 overlay. Anyway, FHA has been the one really traditionally, if you have a lower credit score, they're going to recommend FHA. FHA is a great loan if you have a lower credit score. It actually goes down in some cases. Again, not all lenders will let you go have a credit score of 500, but it does have that baseline of 500. And they have that low 3.5% financing. 3.5% down payment.
I just wanted to mention this. Important notes. Loan approvals depend on the full underwriting profile, DTI, that is debt to income, income stability, assets, reserves, and complete credit history. Lender overlays vary. Buyers should always confirm with a lender.
Perfect. Okay.
And
Yeah.
if you don't have a lender you're working with, we know lots of good lenders and can refer you to some good ones to choose from.
Yeah, and they can help you. And you know what they're really good at is getting your credit cleared up. So, I mean, if they're not looking at your credit score, well, this is conventional. FHA still, I believe, is going to look at your credit score. USDA loans do not set a fixed minimum credit score, but most of them require the 620 to 640. We don't see a lot of USDA around here because it's based on a population, and most of our cities and areas are too populated to qualify as rural.
Yeah.
For the USDA terms.
Yeah.
And then VA does not set a minimum credit score either.
Either.
So the point that you made, Stephanie, thank you, is that it depends on your lender. Talk to your lender.
Yes.
And we can recommend you a good lender. And they're really good at helping you work out sometimes you're going to be required to like pay off a car, you're going to have to pay off a student loan, you're going to have to do something, but they're going to help you figure that out.
Yeah, so that's the importance of talking to a lender. They're not going to force you to buy a house.
No.
They will help you look at your credit and see what you need to do to get your credit where it needs to be to afford a house.
Right, and your debt to income, like maybe having to pay down some loans, or do you have a raise coming up? Let's talk about that. Or maybe you need a different job, or but you also need to be careful if it's a brand new job. That can be an issue too.
Yes.
So talk to a lender. They're the ones that can help you through all this. But we're out of time. We're gonna have to go. So look for our YouTube channel, the Sonoma County Real Estate Hour on YouTube. And then our Facebook page, which is
The Real Estate Hour with Allison and Stephanie Norman.
Yeah, and you can get all kinds of information on there. You can actually contact us through there. If you want to just give us a call, we're happy to chat with you. Our number is 707-799-3617.
And you can also find us on the KSRO website. You can find all of our podcasts, minus today's.
Minus today. We're going to drill that one in. It's not on today. Sorry. Anyway, maybe we'll post the YouTube channel when we get there, when we get it. But anyway, we got to go. So give us a call. We'd love to help you with all your real estate needs. We are local realtors here in Sonoma County and covering 5 barrier counties. And we're happy to help, even if it's just to have a conversation and get you on that right path. I'm Allison Norman.
I'm Stephanie Norman.
We're the Norman Home Team, and you've been listening to the Real Estate Hour. We'll see you next week.
You've been listening to The Real Estate Hour with Allison and Stephanie Norman, the Norman Home Team on KSRO. Join them every Sunday morning at 9, covering every stage of a real estate transaction. Sonoma County real estate market knowledge from real estate professionals. The Real Estate Hour with Allison Norman and Stephanie Norman, Sunday mornings at 9 on KSRO.